Very good morning all. Very good evening all. How are you? Hope you are doing good. So, are we ready for the class? Are we? Okay, chalo. Let us start with chapter number 1. Okay. What is chapter 1? What is the first chapter? First chapter is nature, objective and scope of audit. So, as I told you, I am referring to ICI study material. Okay, so look here, come to this first page. Okay, so first I want you to read the definition given in this box. First take 10 seconds of time and read this table in the box. Read this definition in the box. So from today, to have classes in a more interactive way, I will be using this chat box extensively. So I will be asking some MCQs also, questions also, and I want you to just type the answer and put it in this chat box so that I'll understand your participation and you also can learn. Okay. So shall we start? Okay. Now look here. An audit is an independent examination of financial information of any entity, whether profit oriented or not, and irrespective of its size or legal form, when such an examination is conducted with a view to expressing an opinion thereon. This is the definition. Okay, so first I want you to write certain bullet points in your notes. After that we'll start discussing. Okay, so first write down examination, highlight this, examination of financial information. Highlight this, examination of financial information. What is this? This is examination of financial information of any entity, whether it is profit oriented or not. Any entity, whether it is profit oriented or not, irrespective of size of legal form. So what we are supposed to do, one, let us write examination of financial information. First write down examination of financial information. First one is examination of financial information. Second one is with a view to expressing an opinion thereon. With a view to expressing an opinion thereon. Then there are so many types of entities, whether profit oriented or no, irrespective of legal size, that we'll see later. Okay, now let us start with our discussion like this. Point number 1, what? Point number 2, why? So what is point number 1? What? What is point number 2? Why? So what is audit? Audit is examination of. What is audit? Audit is examination of financial information. Audit is examination of financial information. Why? Why that is required? To express an opinion thereon. So this is the process or the activity we do. This is the process or activity we do. This is the end result. This is the end result. So what auditor does? Auditor does examination of financial information. Now you tell me where this financial information is available. What is the source to get financial information of an entity? You want to know the financials of Reliance Industries. What will you do? You want to know the financial information of Infosys. What will you do? What is the source of this financial information? The source of financial information is financial statements. The source of financial information is financial statements. So first write down, step by step I will tell you. One, what is meant by financial statements? What is meant by financial statements? Financial statements are the set of documents. Financial statements are set of documents which contain financial information, which comprises five parts. One, balance sheet. Two, statement of profit and loss. SOPL we call. Previously we used to call P&L account. You remember P&L account? Now it is no more account, it is a statement of profit or loss, or we can call it income statement also. What is that? We can call it income statement also. This is second one. Third one, cash flow statement or statement of cash flows. Cash flow statement or statement of cash flows. This is third one. What is fourth one? Statement of changes in equity. Statement of changes in equity. 5, notes to accounts. What is the fifth one? Notes to accounts. So financial statements comprises of 5 elements. What are they? 5 statements. First one is balance sheet. Balance sheet is also known as statement of financial position. Second one is SOPL, statement of profit and loss. This gives you financial performance. What is cash flow statement? How the cash is coming into the organization, how cash is flowing into the organization, how cash is flowing outside the organization. This is a statement given to show you what are the various ways of cash coming in and cash going out. Then statement of changes in equity. You will not get much understanding or information about statement of changes in equity at CA intermediate level. At final level you understand, or when you go to conduct audits and all in your practical life as an apprentice or as a chartered accountant, then you understand. This is nothing but, in simple terms I'll tell you, this is nothing but a reconciliation between opening equity and closing equity. For example, so look here, I'll tell you in a simple way. So a company has given balance sheet like this. Here they have written equity share capital. So this is 31/3/2020. This is 31/3/2019. Say for example here equity is 100 crores. Here equity is 110 crores. Then here reserves are there. Various reserves are there. Here reserves, say 250 is there. Here 320 is there. So how this 250 has become 320? So opening 250, closing 320, it need not be addition 70, no? It can be up, down, up, down. So what is the reconciliation? How this 250 crore rupees of opening reserves has become 320 crores of closing reserve? So what are all the movements in that equity portion of the balance sheet? That is given in statement of changes in equity. This is fourth item. Fifth item is notes to accounts. Now what is notes to accounts? Say for example, a company, look here, they have given, a company has given in their balance sheet, they have given under the assets side, property, plant and equipment 2,812 crores. Now what comprises of this PPE? So you said property, plant and equipment. In that machineries could be there, in that plant could be there, in that factory could be there, in that so many items could be there. Motor vehicles could be there, aeroplanes could be there, air conditioners could be there, computers could be there. Okay, then machines could be there. So what is the breakup of this property, plant and equipment 2,812 crores? So what are the details? What is the gross block? What is the depreciation rate? What is the depreciation method? How much of depreciation is charged? What is the closing block? Class by class, class of assets by class of assets. That will be given in notes to accounts, because On the face of balance sheet, you cannot give that much of information. On the face of balance sheet, you use only one line. What is that line? Property, plant and equipment 2812 crores. So these details will be given. These details will be given in notes to accounts. So what is this? What is this? Financial statement comprises 5 items: balance sheet, P&L, cash flow statement, statement of changes in equity, notes to accounts. Now look here. We have started our discussion with what is audit. Audit is examination of financial information. Now the question is, why is audit? If you understand this, you know it creates actually more curiosity and interest on the subject. Now look here. Imagine there is a company. Imagine there is a company. So who owns the company? Ownership. So who owns the company? Shareholders, isn't it? Shareholders. So who manages the company? Who runs the company? Who is the management? Board of directors or management? Board of directors or management. Now the question is, there are so many individuals. Say 15,000 shareholders are there. In big enterprises, in big corporations, it is possible that they have 10 lakh shareholders, 20 lakh shareholders, possible. In Reliance Industries, millions of shareholders are there, possible. So all these are shareholders. But imagine there are 4 or 5 board of directors. Now the question is, money is invested by all these people, but the game is played by these 3 guys. Game is played by these 10 guys. So 1 lakh shareholders invested money, 10 directors are managing that money. Now what is the guarantee that when I invested money in a company, the director is using my money for a good reason? In a way which will improve my earnings per share, in a way which will give benefit to shareholders. So what is the guarantee that they are not misusing money? Now, how many corporate frauds we have seen? Everywhere corporate governance issue, everywhere use of assets, misuse of money, manipulation of accounts, everywhere frauds. So one fine day what happens, shareholder will stop believing in this management. So there were sequence of frauds. Will you trust the management? Now imagine I am the shareholder. I invested so much of money in S Bank. So will I be comfortable in investing money in another company shares? No. Corporate governance issue everywhere. Now there is a strong mechanism. There is government control. There is control by regulated authorities like RBI. There are statutory auditors. So there is so much of mechanism, but it failed. So it will create some noise, some ambiguity, some concern, some tension, stress in the mind of shareholders. Now shareholder is not comfortable. So on behalf of shareholders, they want someone who can verify whether the transactions done by board of directors, whether the books of account written by board of directors, whether the financial statements prepared and submitted by shareholders, by board of directors to the shareholders, whether everything is proper or no. I just want to know. So as a shareholder, I want to know. Now you understand the process like this. Shareholders are the owners of company. Board of directors are the managers of the company. Investment is by shareholder. With shareholders' money, board of directors are playing the game. Now the question is how genuinely they are playing the game. How genuinely they are running the company. So now try to write down in your notes some important points like this. One. Corporations or companies, you can write. Corporations are owned by shareholders. Corporations are owned by shareholders. 2. Corporations are managed by directors. 3. Shareholders can't participate. In day-to-day operations of the company. Because they might be busy and also because of legal restrictions. Say for example, I have today shares in more than 100 companies. in real life I have shares in more than 100 companies. So if I have shares, can I go, say for example I have Infosys shares, can I go and sit in corporate office of Infosys? Can I do anything in Infosys? No, I am not allowed. So Companies Act never allowed shareholder to enter into the corporate office and participate in day-to-day activities. Only one day you can go, and that one day is annual general meeting. On the day of AGM I am the king, but my life has become, it is something like ek din ka sultan. So one day you are saying I am Sultan, remaining 364 days I am not allowed inside the company also. So don't you think my morale is disturbed now? So shareholders cannot participate in day-to-day operations of the company. 4. So shareholders elect or appoint directors who in turn runs the company. That means they make decisions, decision making, they implement decisions, they make decisions and they implement decisions. So here shareholders are trustees who board of directors are kind of trustees. Okay, this is what we call fiduciary relationship. This is what, if you are reading a foreign course like ACCA or CPA USA, then they call it stewardship. That means custodian. So the wealth of shareholders, the wealth or the property of shareholders is in the hands of board of directors. The property of the shareholders, the wealth of the shareholders, the money of shareholders is with board of directors. But my dear friend, if you are one among the board of directors, it is not your money. Remember, you are only custodian. Who are you? You are only custodian. You are watchman of my house. You are watchman of my house. But in reality, are you behaving like a watchman, or are you misusing my money? Are you misusing my property? That is the concern here. So board of directors should act as trustees. Board of directors should be, custodians of the shareholders' property. They should not misuse. Okay, now I have appointed you. So you are my agent. So at the end of a period, I will ask you to report me what you have done. What is the effect of your transactions? What are the transactions you entered into? What is the financial impact of the transactions? So look here the sequence. 1, 2, 3, 4, 5 points I have told you. 5 points I have told you. Now sixth point, write down sixth very 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 important point. Board of directors are responsible. Board of directors are responsible to make decisions, to implement decisions, this put together is to run company. And they are supposed to maintain proper books of account. And they are supposed to prepare financial statements. And to present financial statements to shareholders for their approval in AGM. Okay, so board of directors are responsible to make decisions, to implement decisions, to maintain proper books of account, to prepare financial statements, and to present financial statements to shareholders. Now you are a shareholder, okay? Now you got one question. Pavan sir, it is the director who entered into so many contracts. It is the director who did the business. It is the director who entered the transaction in the books of account. It is the director who wrote the transaction, who prepared the financial statements. How to trust him? How to trust him? This is the requirement for an audit. So now the question is, if you have copied sixth point, now the seventh point is there will be an issue on credibility of financial statements prepared by the management. So there will be an issue on the credibility of financial statements prepared by the management. Now the problem is, when you prepared something, when you have presented that, why will I accept that whatever you have done is correct? So maybe you might have done something wrong also. You might have written wrong journal entries also. Okay, so to establish this credibility, so the primary objective of audit is to enhance the credibility. Even International Auditing and Assurance Standards Board, when you have read this assurance, the word assurance, which we are going to discuss little later. So what is the meaning of that assurance? Assurance is nothing but an engagement which is performed by independent professional with an objective of enhancing the credibility of subject matter. Enhancing the credibility of subject matter. So the objective of audit is to express an opinion to the shareholders so that shareholders will trust the financial information more. So before discussing more on this particular topic, I want to tell one very important thing. I will ask one MCQ. Okay, I will ask one MCQ. So I will write the question on the board, you copy in your notes, and then you type in the comments section. You type in the comment section, or you type in this chat box. Okay, now which of the following is not a part of financial statements? Which of the following is not a part of financial statements? 1. Statement of income or statement of P&L, statement of profit and loss. 2. Cash flow statement. 3. Director's report. 4. Statement of changes in equity. Okay, so which of the following is not a part of financial statements? 1. Statement of profit and loss. 2. Cash flow statement. 3. Director's report. And 4. Statement of changes in equity. Now I'll give you 10 seconds of time. Fatafat, you put it in, that comment section. That chat is there, no? Write it. Joel said 3. Director's report is not a part of financial statement. What about others? Jyoti said 3. Harini, director's report. Akshay said 3. Director's report is not a part of financial statements. What about others? Fast. I want your participation. Otherwise, there is no point in, me teaching you. Fast. So, Akit Das, Director's Report. Navanita Shanoy, Director's Report. Manu Mohan, Director's Report. Director's Report. Harini, Director's Report. Muhammad, Director's Report. Parveen, Director's Report. Rebecca, Director's Report. Anis, Top 10. Ruku, Francis. Satyasai, Director's Report. Superb. I really appreciate you. The answer is correct. Director's report is not a part of financial statements. This can be a very important MCQ. Write down. Put a star mark and write down. Financial statements does not include. 1. Director's report. Financial statements does not include 1. Director's report, 2. Statement by chairman, statement by chairman, 3. Management discussion and analysis, management discussion and analysis. And one more important thing is audit report. Audit report is not part of financial statements. This could be very confusing. If they are giving you audit report in ABCD, you'll be confused. So audit report is not a part of financial statements. Then corporate social responsibility report. Then vision, mission, strategy, outlook, director's outlook. So industry analysis. So all these things will be there in the annual report. But my dear friends, director's report, chairman report, statement by chairman, management discussion and analysis, audit report, corporate social responsibility report, about the details of the company, like their policies, vision, mission, strategy, their outlook, industry analysis. Nothing is part of financial statements. You understand this? This is very, very, very interesting and important. Okay. So shall we go back? Shall we go back? Now, what is the purpose of audit? What is the purpose of audit? I told you the credibility. Now, let me give you a very small example. You want to buy a house. You want to buy a house. So, there is a newspaper advertisement you have seen in classifieds. Then you identified the owner, you called him and you said that, sir, you have given advertisement in newspaper that your villa you are selling. I am so and so person, I want to buy this house. So you went to the location, the owner welcomed you and has shown this is a 4-bedroom villa, independent one. So 8 cents of land is there and these are the trees, everything. This is car parking, this is kitchen, and you are very happy with the property. But you have 2 doubts. Doubt 1 is ownership. Doubt 1 is ownership. Then first thing what you do is you ask the owner, sir, can I get the property documents? So Xerox copies, photocopies of property documents can you give? They have to give property documents to you. Otherwise, how can you verify whether they are genuine documents, whether the owner is a genuine owner or no? So maybe the owner is in Dubai, some other person is selling this property to you. That could be a fraud. So first doubt comes in your mind whether this property is owned by this guy. So can I trust him? Then the second one is, first one, you'll take all these papers to one advocate. You have given this to one legal advisor and the legal advisor has done some due diligence on all these documents and he said that, sir, all these documents are proper documents. He will collect some evidence. He will inquire into, he will get some information. He has, his own ways of conducting this, examination. So he followed some procedure. Finally, he came to you and said, sir, this property is these documents are genuine documents. The person who is intending to sell this to you is the real owner. Then second question comes in your mind. What about the valuation? What is the structural strength of the property? Whether property is built as per plan and whether the plan is as per this municipal or corporation rules. Say for example, in the location where you are living, local government said 25% of the space, the total area, 25% should be allocated for parking. Say just for one example. Now what if this person has constructed property in 90% of the place, only 10% corridors or 10% parking space he left? That is illegal. Tomorrow if you buy this property, that notice will come to you, no? Notice will not go to the old owner. Notice will come to you because you are the present owner. So you need 2 assurances. First assurance is about the ownership of the property. Second assurance is about the structural strength. Then about the way of construction, about the construction is legal as per the rules in compliance with certain framework and all, whether all these things are as per the standards, as per law, as per rules, as per regulations, as per proper framework, whether this all these things are complied with or no, you have to verify. When you verified this, then comfortably you can invest money in that property. You have invested 4 crore rupees. After doing this due diligence, maybe it will cost you 2 lakh rupees, 5 lakh rupees. Still it is okay. 4 crores worth property when you are buying, nothing wrong if you are doing due diligence with 5 lakh rupees, 10 lakh rupees. But imagine if you have not done this precautionary, due diligence, and then you bought the property, and then you are stuck with some legal issue or some regulatory issue, then you are gone, your money is gone, your peace of life is gone, stress is gone, and you cannot enjoy that I bought a property. That property will become a headache to you. So you have to do this. In the context of our company, when I want to purchase the shares of Infosys, when I want to purchase the shares of State Bank of India, when I want to invest my hard-earned money in a company as a shareholder, even I have these kind of doubts, whether the transactions are done in a legal manner or no, whether the books of account are written properly or no, whether financial statements are, properly prepared or no, whether the company is following corporate governance or no, whether the company has placed all the controls or no. So all these things I want to know. Audit gives this assurance to me. Auditor gives this assurance to me. So this is the reason I should have audit. This is the reason I should have audit. So now here management, here auditor, here shareholders, here shareholders. So now shareholders, 1, appointed management. Shareholders, appointed management. Shareholders, appointed auditor. 2, appointed auditor. Management, 3, runs the company. Runs the company. That means they take all the decisions and they, take care of day-to-day operations. Auditor verifies this. 4. Verifies how the company is being run, especially with respect to financial statements. Then management prepares financial statements and presents it to shareholders. Management prepares financial statements and present to shareholders. Now shareholder has a question mark. Should I trust it? Auditor gives audit report. Auditor, this is 5, 6. Auditor issues audit report. So when auditor issues audit report, the shareholder will not be like this. Shareholder will be like this. Okay. So shareholder will be happy to receive this audit report from the auditor because of 2 reasons. 1, auditor is an expert. He understands law, he understands accounting, he understands how to verify, how to prepare books of account, how to verify books of account. He is an expert. Point number 1. Point number 2, he is independent and he has ethics. And the biggest thing, if you read 7 Social Sins by Mahatma Gandhi, one of the biggest things is having knowledge without morality. So any chartered accountant, any lawyer, any engineer, any doctor who has no professional ethics is a curse to the society. They will destroy the society. It is like, a scientist who is working for, this terrorists. So every auditor should have professional ethics. Every lawyer should have professional ethics. Every doctor should have professional ethics. I understand in today's reality, it is a question mark. How many of the professionals follow professional ethics is a question mark, but still Majority of the chartered accountants I have seen, they are very good. They follow this professional ethics and all. Especially where I did my articles and all, I learned a lot from my principal auditor. And he is not only, you know, professionally he taught me so much, and as a person also he inspired me so much. I learned a lot from my father. I learned a lot from my principal auditor. So I am blessed to have this kind of good people. Chalo, anyway, coming out of all this general context, shareholder will be happy to receive the audit report from the auditor. Okay, now you understand this whole process. Now let us understand composition of board of directors. So have you heard this word which confuses many people? Those charged with governance. Those charged with governance. This every day you use TCWG. Those charged with governance. Many times you say this. So, what is management? What is those charged with governance? Are they same? Maybe. Are they different? Maybe. So first you should understand the meaning of what is those charged with governance and what is the meaning of management. Now look here. This board of directors are there, no? Board of directors can broadly be categorized into two. Board of directors can broadly be categorized into two. Executive directors, non-executive directors. Executive directors, non-executive directors. Who are executive directors? Executive directors are those directors who involve in day-to-day operations of a company. So who are non-executive directors? Non-executive directors are those directors who involve in planning, who involve in policy making, who involve in strategy, who involve in decision making. But they do not involve in operations or day-to-day activities. They do not involve in operations or day-to-day activities. Okay, so board of directors comprises two parts. One is executive directors, second one is non-executive directors. Now, do you know who is the leader for this troop? Leader for this troop is CEO. So, out of executive officers, he is the chief, like commander-in-chief. You can say Katappa. So, the CEO is Katappa. So, chief executive officer is the head of all executive directors. Now, who is the leader for this non-executive directors? Chairman. So for making you understand, I can give you one example. This example need not be 100% real example also, but just to make you understand, I am telling you this. Do you know Microsoft? So the moment I say Microsoft, next second who comes to your mind? The moment I said Microsoft, who comes to your mind? So can we have a chat again on this? The moment I said Microsoft, who will come to your mind? I'll give you 5 seconds of time. Fatafat, I want you to type and show me. So this shows how eagerly you are participating in the class. That will encourage me also. Chalo, I am waiting for your answer. When I say Microsoft, who is the person that is coming into your mind? I am still waiting for your answers. Who is the person that is coming to your mind when I said Microsoft? Good. I got one answer, two answer, three answers, four answers. Five more. Another five answers I want. After that, I'll take it, forward. Top 10, Akshay, Satya, then Navanita, Joel, Daya, Abraham. Okay, anyone more? Jyoti, very good, very good. Arundhati, Rukku, Anis, good. You said Bill Gates. I'm so happy. So the moment I said Microsoft, in your mind, I'm happy that this guy Bill Gates came. But is he the one who's running Microsoft today? No, he's not the person who's running Microsoft today. So today you know that the CEO of Microsoft is Satya Nadella, proudly Indian. So this guy Satya Nadella is the person who is CEO of the company. He is CEO of the company. So who is CEO of Microsoft? Satya Nadella. Then what Bill Gates will do? Bill Gates, imagine he is honorary chairman. So he will participate in meetings and he will tell what to do, what not to do. He will tell what to do, what not to do. Okay, then that doesn't mean Satya Nadella cannot think. He also participates in decision making. It is not that, executive directors won't participate in decision making. Now, this in corporates is called CXO. Have you heard CXO? Like CEO, CFO, COO, CTO, CIO, CAO, CMO, all these people are called CXO. What is CEO? Chief Executive Officer. What is CFO? Chief Finance Officer. COO, Chief Operations Officer. CTO, Chief Technology Officer. CIO, Chief Information Officer. CAO, Chief Admin Officer. CMO, Chief Marketing Officer. All these people are executive directors. Now, do you know there are certain independent non-executive directors? These people do not involve in day-to-day operations, but they involve in strategy making. So what is the summary of the whole discussion? I'll tell you the summary of whole discussion is board of director comprises two categories of people. One who plan, strategize, direct, control the company. Second category is who implement the plans. Day-to-day operations. So these are two categories of people. Now, my dear friends, understand these are those charged with governance. These are management. So practically, in case of a small company, both could be same. Say for example, there is an entity, 4 shareholders are there, out of that 2 are directors, and these 2 directors are actively involved in all the things. Small company. So in this small company, there is no difference between those charged with governance and management. Both of them will be same. But in a major, very big company like Reliance Industries, I can say that this Mukesh Ambani is those charged with governance, and say for example Reliance Industries has a branch in Chennai, that branch manager is management. So this management again can be of 3 levels. This can be top level management, this can be middle level management, this can be functional level management, but those charged with governance can only be this level. Those charged with governance can only be top level. It cannot be, those charged with governance cannot be in middle level and functional level. Ignore it. They cannot be in middle level and functional level. But management is there in all the levels. This is one major difference. You should understand the difference between those charged with governance and the board of directors, because from today, in every standard, in every lecture, in every para, we will be discussing about these things. Okay, and we will discuss some other very important topics also. So I will ask you one question. Again, I want you to be ready. You have to type the answer in the chat box. 1. How the financial statements of a company are to be prepared? how the financial statements of a company are to be prepared. I want you to answer this fast. I'll see how many of you actually know this. So you are CA students, you are pursuing CA, ACCA, like that. So you have to know this. I'm waiting for your answers. Come on, come on. Let me see how many of you actually knows this. How the financial statements of a company are to be prepared. Beautiful. Navnita, according to Companies Act 2013, very good. Top 10 based on accounting standards. Good. I want more. I want more. So you can also say whether Companies Act is correct or accounting standards answer is correct. There are two answers. Navnita said Companies Act. Some other student said in the name of top 10 screen name, he said based on accounting standards. Which one is correct? I'm asking others, which one is correct? Are you with Navnita or are you with accounting standards? What? Daya Abraham, beautiful. Gap and applicable financial reporting framework, accounting standards. Ruku, Companies Act 2013. Good. More. On the basis of Companies Act, Joel, and then Jeffrey Johnson, according to the Schedule 3 of the Companies Act. Beautiful. I appreciate this answer also. So, and any other? Manu Mohan, based on gap and standards on auditing and Companies Act. Is it SCA, Manu Mohan, is it SCA or AS? SCA is standard on auditing. AS is accounting standard. I think you meant accounting standard, but you typed SA. So I am taking it as accounting standard. Your answer is correct. So anyone more? Tell me more, tell me more, tell me more. So all your answers are correct, but in specific, if I need to choose one particular answer, I appreciate Daya Abraham, gap and applicable financial reporting framework. This is the perfect answer. Applicable financial reporting framework. So this applicable financial reporting framework involves two parts. First one is statutory requirements. This statutory requirements is, for example, in case of a company, Schedule 3 to Companies Act 2013, like how, Mr. Jeffrin has properly pointed out. This is Schedule 3 to the Companies Act. And then comes accounting standards, which are pronouncements of the Institute of Chartered Accountants of India. So imagine and Satya Sai, applicable financial reporting framework. Satya Sai, you are correct. Sriram, in accordance with gap. Sriram, you are correct. So all these answers are correct. I really appreciate you. So how the financial statements of a company are to be prepared? Simple. One, you need to comply with law. If there is any applicable act for you, you have to comply with this. For example, if you are a bank, there is Banking Regulation Act. If you are an insurance company, there is Insurance Act. If you are bank, RBI guidelines. If you are insurance company, IRDA, Insurance Regulatory Development Authority of India. These are what we call statutory requirements. That means the act, that means the rules and regulations of the authority. You have to comply with them. Then comes accounting standards. Now imagine today one company came with financial statements like this. Vishweshwar accounting framework, correct. So look here, one person came with this P&L to me. He has prepared profit and loss account. Particulars rupees. Here he has written by sales, by closing stock, to opening stock, to purchases, to other cost of goods sold like expenses, operating expenses, to gross profit, by gross profit, to other expenses, to net profit. So this is the financial statement. One client who is a company came to me and he said, Pavan sir, please take this profit and loss account and conduct audit, give audit report. please try to understand one thing. There is something called prerequisites of accepting a client. There is something called prerequisites of accepting a client. I am a chartered accountant, I am a professional, I should know the form, content, manner. What is that? Form, content, manner in which financial statements are to be prepared. The moment I saw this P&L, my mind should say, dear professional, this is not the way P&L is to be prepared. This should not be the way P&L is to be prepared. This is not in accordance with part 2 requirements of schedule 3 to the Companies Act 2013. You should not accept audit. Forget about giving audit report, forget about conducting audit, forget about it. You should not accept it. You should reject. You should tell the MD of the company, sir, I'm so sorry, I cannot accept your audit because your financial statements are not prepared in accordance with acceptable financial reporting framework. You please prepare financial statements in accordance with applicable financial reporting framework, then call me. I would be happy to conduct audit to you. Otherwise, I cannot accept audit. This should be the importance of applicable financial reporting framework. So, how the financial statements are to be prepared? How the financial statements are to be prepared? In accordance with applicable financial reporting framework. Now, one more contest. I am asking a question. I'll see who is going to type it fast. Please be ready. How the audit is to be conducted? Who will conduct the audit? The auditor. How the audit is to be conducted? So this auditor, how he can conduct audit? How he has to conduct audit? So I want your answer. Come on fast. How the auditor conducts audit? So I am waiting for your answers. Please type it fast. How the audit is to be conducted? How the audit is to be conducted? Based on essay, one answer. According to essay, one answer. Navanita, according to standards on auditing, top 10 based on standards on auditing. Manu Mohan based on standards on auditing. Ruku Francis based on standards. Joel based on standards. Anis according to standards. Good. Any other answer in accordance with SA and SIA? Sriram, could you please explain what is SIA? Do you mean to say it is statement on internal audit? Is that SIA statement on internal audit? Then Akshay, by obtaining sufficient and appropriate evidence on financial statements. Akshay, I appreciate your answer, but in this context, the answer is not 100% relevant. Jeffrin, as per Companies Act 2013, SA, AS and various tax laws. Superb. This seems to be a much elaborated answer. I want more. Daya Abraham, SA. Anyone else? I want more participation from you. Yes, standards on auditing. Neena Narayanan, according to standards. Beautiful, very good. So, see, do you know there is one act called Chartered Accountants Act 1949? Sriram, yes. So, I appreciate. You said standards on audit and standards on internal audit, correct. So, do you know that there is Chartered Accountants Act, which is passed in 1949? As per Chartered Accountants Act, do you know there is something called professional misconduct? So what is this professional misconduct? A professional, that means a member of Institute of Chartered Accountants of India, doing something which is prohibited, that is called professional misconduct. So if you are involved in professional misconduct, you could be arrested. So if I did something wrong, I can be arrested. So do you know what Chartered Accountants Act said? Carrying on any independent audit, not in accordance with standards on auditing, not in accordance with, generally accepted auditing practices in India. If you are not following generally accepted auditing practices in India, it is a professional misconduct. So, not carrying on audits or non-compliance with gap. What is this gap? It is not that gap. You know already one gap. What is the other gap? Generally accepted accounting principles. This is generally accepted auditing practices. Generally accepted auditing practices. So if you are not conducting audit as per generally accepted auditing practices, it is a professional misconduct. That means you can be reprimanded. You know, ICI can give you warning, ICI can give you a show cause notice, ICI can summon you, ICI can ask you to come and explain, ICI can take some disciplinary actions on you, or in worst cases they can arrest you also. That means single question, single sentence question, how the audit is to be conducted. Single answer, in accordance with generally accepted auditing practices in the country. Now the question is, what constitutes generally accepted auditing practices? 1, standards on auditing. 2, statutory requirements. For example, Companies Act. So Companies Act section 143. Then 3 other rules and regulations like CARO, Companies Auditors Report Order. And in case of bank audit, LFAR, long form audit report. So there are so many requirements which the auditor has to comply with. These are put together called what? Generally accepted auditing practices. Okay, so can we be here for another 5 minutes? It is 55 minutes of class I can see from my screen. So can we be here for another 5 minutes? So are we okay with another 5 minutes? If you are okay, I will complete one more question and then we'll go. If you are not okay, we can, wind up the class here. I want your participation. Shall I take another 5 minutes? Can I take another 5 minutes? Shall we sit for one more question? I'm waiting for your answer. Can we sit for another 5 minutes? So I got one answer, two answers, okay. I want at least 10-15 answers, then I can continue, otherwise we'll log off. Can I have more SS? Okay, I am okay with another 1 hour also, sir. I really appreciate it. Okay, yes, continue. Okay, superb. So let us discuss. I am so happy. Let us discuss, what is the objective of audit. So I want you to take pen and paper and write down this. Objective of audit. I want you to take pen and paper and write this. Top 10, fantastic class. Thank you. So what is the objective of audit? Okay, now write down. Audit is conducted with an objective to express an opinion on the financial statements as to whether point number A, as to whether financial statements, as to whether the financial statements are prepared by the management to give a true and fair financial position and performance, are prepared by the management to give a true and fair financial position and performance. So the most important thing we used here is true and fair. What is true and fair? This is our agenda for tomorrow. Tomorrow I will explain you what is true and fair. B, whether financial statements comply with the applicable financial reporting framework. Financial reporting framework already we have discussed today. So first one is whether the financial statements are prepared by the management to give true and fair view. Second one is whether they have complied with applicable financial reporting framework. And then C, they are free from material misstatements due to fraud or error. Material misstatements due to fraud or error. So this is our tomorrow's agenda. Very, very, very important. What is meant by a material misstatement? We'll discuss this tomorrow. So now please note this part, objectives of audit, as very, very, very important. One question can come, and also MCQs will come out of this. And also during the classes, I'll be giving you so many MCQs for your practice also. I'll be sharing that in WhatsApp group and also in our Telegram channel CAP classes, and that will be made available in our website also soon. So, before I forget, for those who do not have my number, I'm giving my number. It is 98467915998. So I'll be giving some MCQs. You please be in touch with me on this number. Okay. Now again, going back to the objective of audit. What is the objective of audit? Audit is conducted with an objective to express an opinion. This is the highlight. What is this opinion? Opinion is whether the financial statements are showing true and fair view. What is this opinion? Opinion is whether the financial statements are showing true and fair view. Okay. Now, write down the assignment today. If I am putting this much of effort for educating you without expecting any monetary benefit, I want you to be disciplined, and I want some effort from you also. So, today I am giving you one homework. You have to do this homework before you come tomorrow. So what is your homework? One. Homework, assignment. 1. Read Schedule 3 to the Companies Act thoroughly. Okay. So in this Schedule 3, there are two parts. Part 1, Part 2. Part 1 deals with balance sheet. Part 2 deals with statement of profit and loss. And remember, there are two proformas. One proforma is for accounting standards. One proforma is for Ind AS compliant financial statements. So we'll close the class in another 2 minutes. But before that, I will give you some homework. Point number 1. Point number 2, I will ask you one question. With your answers, with your response to that question, we'll log off. So this is 1. 2. Second one is, what is meant by A, true and fair view, B, materiality, C, frauds and errors. I am very sure about this frauds and errors you might have studied in your earlier classes also, like in +1, +2 also it is there, in your CPT and foundation it is there. This various types of errors, like errors of commission, errors of omission, compensating errors. I am very sure you might have studied self-revealing errors, all that blah blah blah. Frauds also you might have studied something like these are intentional misrepresentations, like manipulation of accounts, misuse of assets. All these things you might have studied. So I want you to do this homework and come tomorrow. What is the homework? 1, read Schedule 3. 2, what is meant by true and fair view, materiality, frauds and errors. The best lecturer in the world today is Google. If you use Google properly, it is the best. So you Google and read all these things. 1.5 GB Mukesh Ambani has given you every day. Out of that 1.49 GB, whatever you do, I will not ask you. Every day 0.01 MB you do for me this kind of search and you read it. 1.49 GB is yours, 0.01 MB is for Pawan sir. Okay, now the question to conclude the class is, in balance sheet, whether assets come first in the pro forma, assets come first, or equity and liabilities. So which comes first? If I am preparing balance sheet, should I prepare with equity and liabilities? Should I prepare it like this? Equity and liability as on 31/3/2020, as on 31/3/2019. Should I prepare it like this, or should I start with assets? Should I start with assets? So how many of you say assets first? How many of you say, equity and liabilities first? So tell me, red or black? Black is for equity and liabilities, red is for assets. So what is the question? In the balance sheet, when you open balance sheet of a company, when you are reading the pro forma, when you are reading the form and content, should the company give assets first, or should the company give equity and liabilities first? Which comes first? So Navanita equity and liabilities, Sriram equity and liabilities, Arundhati equity and liabilities, Akshay equity and liabilities, Jane equity and liabilities, Daya equity and liabilities, Joel, Ruku, Santo Thomas equity and liabilities. More I want more participation. Let me see how many of you more are there. Equity first, equity and liabilities first, equity and liabilities first. So I'll give you one super duper surprise. Okay, you open Reliance Industries financial statements today. Reliance is an Indian company only. So you open Reliance Industries financial statements, my dear friends, to your damn surprise, Reliance financial statements start with assets, not with equity and liabilities. You take any company, big company, it starts with assets, not with equity and liabilities. So many of you have written equity and liabilities. I really appreciate. Your answer is correct. I'm not saying your answer is wrong. But balance sheet of Reliance, balance sheet of Infosys, balance sheet of TCS, balance sheet of so many companies will start with assets, because if the company is following Ind AS, assets first. If the company is following accounting standards, equity and liabilities first. That is the reason I told you, my dear friends, in schedule 3 there are 2 balance sheet pro formas, 2 P&L pro formas. Many students do not know this. Do you know in schedule 3 requirement there are 2 balance sheet pro formas? One balance sheet is for those companies who are complying with accounting standards. One pro forma is for those companies who are complying with Ind AS. What is this Ind AS? Ind AS is, in compliance, in lines with IFRS. That we will discuss in detail when it comes. Not there in your CA intermediate syllabus. In CA final, the whole FR is Ind AS, which is nothing but IFRS. That we will see later. For now, at your level, I want you to understand in Schedule 3 requirements to the Companies Act. In part 1, when you open, there are 2 balance sheets. One balance sheet is for those companies who are preparing financial statements in compliance with accounting standards. They will start their balance sheet with equity and liabilities. Second pro forma is for those companies who are preparing their financial statements in compliance with Ind AS, Ind AS, which is nothing but, another version of, Indianized version of IFRS. So if you are a company following Ind AS, you have to first put assets, and then second part is equity and liabilities. First part is assets. In India, as per the Ministry of Corporate Affairs, all the companies whose net worth is more than 500 crores, more than 250 crores, in a phased manner, these people, Ministry of Corporate Affairs started implementing Ind AS. Now, any company whose net worth is more than 250 crores, they have to follow Ind AS. Small companies still following accounting standards. Big companies following Ind AS. So there are two pro formas, my dear friend. Please be careful. But as far as CA intermediate is concerned, your answer is correct. Equity and liabilities, your answer is correct. Because in CA inter, accounting standards are there. Ind AS is not there. Only Ind AS introduction is there. So if you are CA intermediate student, your answer is correct. But if you are ACCA student or CPA student, or if you are doing any international course, your answer should be assets. CPA, forget about them, US GAAP is completely different. But if you are studying IFRS, assets first. Ind AS, assets first. Accounting standards, equity and liabilities first. So with this, shall we leave the class? Shall we stop the class? So thank you so much. I really enjoyed the participation. So your participation is good, your energy levels are good. Thank you, and tomorrow we'll come with one more video. So first 2-3 days, I will spend lot of time to give you basic vocabulary and understanding. Then we'll go question by question, standard by standard, and then I'll give you the actual content. So 2-3 days of warm-up is required for you to understand the terminology, for you to understand what is what. After that, we will look at your actual curriculum. Okay, so hope you enjoyed the classes. Sriram said thank you. Thank you, Sriram. So shall we log off? Good night. See you tomorrow evening 7 o'clock. Shall we? Chalo. Thank you so much.